guys, this is E.N MACHARIA, and I'm here for the CPA guys. That is audit and assurance, and in last time's class, we wrote something or subtopic professional ethics. So we shall start from there. Have your notebook and a pen. Yes, have a notebook and a pen, and let's proceed from where we stopped. So I hope you are set and ready to begin our lesson. So professional ethics. A small something there. A member of a profession owes duty to the public, including the employer, the profession itself, and to the members of the profession. Full stop. Professional ethics are rules of conduct that governs the behavior of an accountant. In Kenya, they are issued by Institute of Certified Public Accountants of Kenya, that is, into bracket, ICPAC, in form of statements and explanatory notes. A professional accountant should act in a manner consistent with the good reputation of the occupation and refrain from any conduct which might bring discredit to the profession. So, the following are fundamental principles stated by ICPAC to ensure auditors are credible people before they give credible financial statements. Number one, integrity. A member should be straightforward, honest, and sincere in his approach to professional work. Number two, professional independence. That person must be professional independence. This is a fundamental concept to the accounting profession as a whole. It is essential as an attitude of mind characterized by objectivity and integrity. Number three, Confidentiality. The Guide to Professional Ethics states that information acquired from the client, where there is public duty to disclose, or where there is legal or professional duty to disclose such information. A member acquiring information in the course of professional work should neither use nor appear to use that information in his personal or third-party advantages. E.g., if a member is auditing a limited company and he realizes that the company has made a substantial increase in profits, it would be unethical to advise a friend to buy the shares of the company in anticipation of the expected increase in the share prices as a result of increase in profitability. Number four, technical competence. A member has duty to carry out his professional work with care and skill and in conformity with the professional ethics standard issued by ICPAC and by the law of Kenya. A member should not undertake or continue professional work which he himself is not competent to perform unless he obtains such advices and assistance as will enable him to perform such work. To be competent, a member should be fully conversant with accounting, bookkeeping, auditing, financial management, information technology, receivership, liquidation and bankruptcy law, taxation, both personal and corporate, and must be aware of economic environment with which professional as well as economic issues. He should be a good communicator. Auditor's independence is an important factor in establishing the credibility of an audit opinion. Therefore, ISPAC has given guidelines in the best conduct code in situations where the auditor's independence may be impaired. These are: 1. Fee. It is undesirable for a practice to receive a significant proportion of recurring fee income from one client or group of connected clients. A new or old practice is expected from his provision because in the case of a new practice, he has not yet built a sufficient client base, and as old practice may be in decline. Number 2, personal and family relationship. A family of personal relationship can affect objectivity. Therefore, an accountant should take steps to ensure that this does not interfere with his objectivity in approach to audit. E.g., problem may arise when a person in place has a mutual business with an officer of the client company or has close friendship with one of the officers. C. Beneficial shareholding. A practice should ensure that he does not have as an audit client a company in which a partner in practice, the spouse or minor child of such partner, is the beneficial holder of shares, nor should it employ on the audit any member of staff who is a beneficial holder of such shares. Shares in an audit client may be involuntarily acquired, e.g., where a partner inherits such shares or marries a shareholder. In such case, the shares should be disposed of at the earliest practicable date. If the company's articles of association require that the auditors should have a minimum number of shares, then the member should take minimum number allowed. The shares cannot be used by the member in an annual general meeting to vote on the appointment of the auditor and his remuneration. D. Trustee shareholding. Trustee shareholding. A practice should not have an audit client, as an audit client, a company, if a partner in the practice or the spouse of a partner is a trustee of trust holding shares in that company and the holding is in excess of 10% of the issued share capital of the company or the total asset comprised in the trust. E. Practice loan. A practice should not make a loan to a client or guarantee a client's borrowings or accept a loan from a client or have a borrowing guarantee by a client. F. Goods and services. Acceptance of goods or services from a client may be a threat to independence. This should not be accepted by a partner, his spouse or minor child, or by the staff of practicing expert on terms no more favorable than those available to the generality of the client's employees. Acceptance of undue hospitality poses a similar threat. G. Commission. Where advice is given to client in such that if acted upon, it would result in a commission being earned by the practice or anyone on it. Special care should be taken to ensure that the service is in fact in the best interest of the client. The client should be informed in writing both on the fact that commission would be received as soon as practicable, the amount and terms of such commission. H. Conflict of interest. And under that, we have 4 points. Number 1, provision of other services to client. Provision of other services to client. A member should be alert to the danger posed to his independence by providing accounting and other services which place him in an executive position to his client. A member should use different staff for those services and also ensure that the client takes full responsibility for that work. Number 2, competing clients. A member should frankly disclose to both clients and advise them to choose another auditor and then disengage one of the appointments. However, he can also advise to resolve the conflict. For example, of competing clients would be where a practice advises one client upon the figures on which to base a tender for a contract, and if knowingly become involved in advising another rival company tendering for the same contract. Number 3 or C, receivership and liquidation. If a company, a member is auditing goes into receivership, the member should not accept an appointment as a receiver manager unless at least 2 years have elapsed. Number C or D, previous employment. A member who has been an employee of a company have left that employment should not accept an appointment as an auditor of that company until at least 2 years have elapsed. Subtopic: additional steps to enhance auditors' independence. Additional steps to enhance auditors' independence. So, we have highlighted some of the key points that can make an auditor's independence be compromised. So next time we shall start from their additional steps to enhance auditors' independence. So until next time, have a good time.